And there you have it, the closing bell at the New York Stock Exchange this Monday, capping off another day of trading on Wall Street. The Dow Jones is down by about 150 points, the S&P 500 by about 1%, while the Nasdaq is down about 1.5%. I want to bring in Frances Stacy. She's the Director of Strategy at Optimal Capital. Frances, welcome. Can you tell us what was driving the markets today?
Well, the markets are being driven by the fact that this is now the fifth down day, and it's basically a reiteration from the Fed that they're going to remain tight. They're going to continue to raise interest rates. They're looking for the federal funds rate to go up to 5.1% by the end of next year. And what this means is that people who have interest rate sensitive situations, variable interest rates on their credit cards, variable interest rates on other loans that they have, it's going to continue to get more and more onerous to service that debt. Inflation peaked in June, but it's still going up at 7.1%. So things are still getting more expensive, and the credit card bills and interest rates are still getting more expensive. So the 61% of the population that's living paycheck to paycheck, it's getting harder and harder and harder for them to make ends meet. And the Fed is saying that they're going to continue to march the balance sheet down and also continue to raise rates. And so the stock market being an overall, amount of liquidity in the economy, as that liquidity is being reduced, is going lower.
So are you saying that, because of inflation, because of these high interest rates and people already having so much credit card debt, some might shy away from spending even more during the holiday season? And if so, what kind of impact could that have on the economy?
Yes, certainly. So it hasn't returned to pre-pandemic levels. And the thing is that that's true. And hopefully some people who don't realize that debt service is still going to continue to go up don't overspend for the holidays. But I think people have gotten very cognizant of that. And they're just buying a lot less in the quote unquote holiday related sectors. And I just know personally I have enough people telling me this year, hey, let's just not do Christmas presents for each other.
Mm-hmm.
We're friends, we love each other, and so I do think that the shopping and the holiday spirit is muted. But what this really highlights is the difference between, it's the wealth gap. It's the difference between the lower 60% and the upper 40%. By contrast, the upper 40%, had a stock market rally, that just, went from October until December 1st. And so their assets actually increased in value from, they're a little less down than they were. And so those people are still spending, and we're seeing that, in airline expenditures and luxury goods and things like that. So the economy is just really divided right now.
Now, coming back to retail, I wonder, this season, the holidays are make or break for a lot of those, shops. Will the higher prices for people who do shop there help them meet their bottom line?
Well, what's really tough about the bottom line for a lot of retailers is they had this huge glut of inventory that was sort of delayed during the entire pandemic, and it was older inventory, and they were going to have to kind of discount that inventory to kind of get rid of some of the inventory. So it's sort of a mix between prices going up, other things going up. I don't know that retailers are really upping their prices necessarily, but that margin is going to get compressed to the extent that they have to discount that inventory. And I just think people, even though the inventory may be discounted in certain circumstances, I think people are just going to spend less, because even though gas prices have fallen, they got hurt when things were going up. Their food and gas prices have been up dramatically for, an accumulative amount of time, in addition to their debt service. So retailers are probably going to get less bang for lowering costs, this season, and less bang for their discounts. And that is going to have some margin compression coming into the next year.
And Frances, I'm just wondering, instead of saying, well, let's not give each other gifts this year, is there another alternative from your reporting, anything you have in mind that might be a good way to, get away from that high credit card debt, to ease just the inflation pressures for people thinking of what to get, because the deadline is very soon?
Yes, it's true. So it's kind of funny, this year I've been baking people cookies.
Nice.
I have a great ginger molasses recipe that's been in my family for ages. I've been baking people cookies. I've been reading people cards. Entertainment is interestingly up. The Broadway, Broadway and Christmas shows and things like that have reached sort of very close to pre-pandemic levels. But again, that's mostly the upper 40%. So I just think, appreciating people, telling them how much they mean to you, writing them beautiful cards, baking them food, doing favors for them, having movie watching or entertainment experiences alongside of them, I think that that's the emphasis, and particularly post-COVID when people were so isolated.
Yeah. Well, Frances, Stacy, thank you. Those are great ideas. Also, maybe making donations on behalf of people. Thank you for joining us.
Yes. Yes, my pleasure.